Lucid Motors has been dismissed by many in the market, but could it actually be one of the most undervalued EV stocks flying under the radar? In today's video, we're exploring whether Lucid's beaten-down share price is a red flag or a golden entry point for long-term investors. Welcome back to Stocks Telegraph, where you get the latest financial market news and updates. If you're searching for smart, data-backed stock insights, don't forget to like this video, subscribe, and hit the bell icon so you never miss a high-conviction opportunity. As of May 21, 2025, LCID stock trades at $2.96 per share, giving it a market cap of roughly $8.17 billion. Year-to-date, the stock has shown only a modest 1.99% gain, suggesting investors are cautious despite recent developments. In 2024, Lucid delivered 10,241 vehicles and produced just over 9,000 units. Revenue for the year hit $807.8 million, with $234.5 million recorded in the fourth quarter. These figures underscore a company that's still in the ramp-up phase. Importantly, Lucid expects to double output in 2025 to 20,000 vehicles. And with $5.8 billion in liquidity, the company believes it can fund operations through mid-2026. Leadership changes have also shaped investor sentiment. The departure of CEO Peter Rawlinson earlier this year raised eyebrows. He was instrumental in developing the Lucid Air and its proprietary tech. However, interim CEO Mark Winterhoff is pushing forward with production growth, anchored by the launch of the Gravity SUV. Lucid's crown jewel remains the Air sedan, renowned for its performance and luxury appeal. The base Air Pure offers 430 horsepower and a 420-mile range, while the Air Touring steps up to dual motors and 620 horsepower. The Grand Touring model delivers an astonishing 516-mile range, and the Air Sapphire tops it all with 1,234 horsepower and a 0-60 time of 1.9 seconds. Then there's the Gravity SUV, which marks Lucid's entry into the competitive electric SUV space. Seating up to 7, it combines utility with performance, delivering up to 828 horsepower and an estimated 450-mile range. Charging is also fast, thanks to Lucid's high-voltage platform. Looking ahead, Lucid plans to launch a mid-size SUV priced around $48,000 by late 2026, aiming to reach a broader, more mainstream audience. This step down in pricing could significantly grow its market reach beyond the ultra-premium segment. Lucid's current valuation places it below several EV peers. Rivian is valued at about $15.5 billion, while Tesla towers at over $1 trillion. Lucid's price-to-sales ratio stands at approximately 8.92, which is higher than some rivals, suggesting investors are still pricing in future growth despite modest revenue. Analyst sentiment is mixed. The average 12-month price target is $2.38 with a high of $5 and a low of $1, pointing to cautious expectations. However, institutional ownership remains strong. Nearly 75% of Lucid's shares are held by institutions, with the Saudi Public Investment Fund alone owning nearly 60%. Other major holders include Vanguard, Fidelity, and State Street. This backing suggests that some big players still believe in Lucid's long-term vision. So while Lucid may be underperforming now, strong institutional confidence and a forward-looking product pipeline could hint at upside potential. Lucid's financial resilience is largely thanks to Saudi Arabia's PF. In August 2024, PIF injected another $1.5 billion, half as convertible preferred stock and half as a term loan. These funds are fueling Gravity production and supporting a new manufacturing plant in Saudi Arabia, which will eventually produce 150,000 vehicles annually. As of the first quarter 2025, Lucid has about $5.76 billion in liquidity. That's a healthy cushion, but the burn rate remains high. In 2024 alone, the company posted a net loss of $2.7 billion, typical for early-stage automakers scaling production. The partnership with PIF does more than just provide capital. It also positions Lucid as a key player in Saudi Arabia's Vision 2030 plan, potentially opening new international markets and creating a foothold in the Middle East's emerging EV ecosystem. Still, Lucid's journey isn't without roadblocks. The EV space is becoming increasingly competitive, and price wars are intensifying. Lucid has cut prices on its Air models to attract buyers. The Air Pure now starts at $69,900, with lease options from $579 per month. But these moves squeeze margins, especially for a company still climbing its production curve. Supply chain hiccups have also caused delays. Gravity's rollout faced issues with its heads-up display and third-row safety tests. CEO Winterhoff confirmed that some features were temporarily scaled back to meet timelines. These setbacks not only affect deliveries, but also dent investor confidence. Despite headwinds, Lucid has several potential catalysts in play. Production is trending higher. In the first quarter 2025, Lucid made 2,212 vehicles, excluding 600 plus in transit to Saudi Arabia. Gravity deliveries resumed in late April, and the model is positioned to be a strong performer in the SUV category. Lucid is also expanding through strategic partnerships. A recent multi-year agreement with Panasonic Energy will ensure a stable supply of high-performance battery cells, key to maintaining its competitive edge. These cells offer 800 WHKL energy density, boosting both range and performance. On the financial front, Lucid is showing signs of improvement. The first quarter 2025 revenue came in at $235 million, up 35% year-over-year. Net loss shrank to $366 million, down from $680 million in the prior year. Gross margins improved by 37 percentage points, a strong indicator of operational efficiency gains. Internationally, Lucid's first plant outside the US has already assembled 800 EVs in Saudi Arabia, marking a significant milestone in its global strategy. This expansion could serve as a launchpad for tapping new demand across international markets. Lucid Motors presents a compelling but complicated picture. Its Air and Gravity models showcase industry-leading innovation, and the company is steadily building out its product pipeline and production capabilities. Backing from Saudi Arabia's PUF provides both financial support and strategic alignment with long-term growth markets. At the same time, leadership uncertainty, intense competition, and operational risks remain real concerns. Analyst expectations are muted, and Lucid's stock is far from its former highs. The company needs to execute flawlessly to regain market confidence. For patient investors who believe in Lucid's tech-first luxury EV vision, this could be an opportunity worth considering. But for value-focused investors, the stock may still carry too much execution risk. Lucid may be trading like a long shot, but if the vision pans out, this could be the EV comeback story of the decade. Thanks for tuning in to this deep dive on Lucid Motors. If you found this breakdown helpful, give it a thumbs up and subscribe to Stocks Telegraph for more market insights. Got thoughts on LCID? Drop them in the comments. We'd love to hear whether you're bullish or bearish. Until next time, stay informed and stay strategic.